In this tutorial, we're going to take a look at what the effect is of making a down payment or extra payments on the interest that you pay. So now this is the website that I've used all along for all the other financial literacy videos. This is a slightly different one. It's not Canadian, but there's some features of it I want to use to show what I need to show for this particular tutorial. Now, it isn't Canadian, but the amounts are very, very similar. So notice that the monthly payment here, now I've got the same amount, $500,000, 2% for 25 years, so it's the same here. Notice the monthly payment is only a difference by about $2. So it's $21.17.26, $21.19.27. Okay, so even though it's not Canadian, the numbers are extremely close. Okay, so the total interest paid $135,177, $135,781. So it's only off by a little bit. Okay, but so this one you actually can make a down payment or extra payments and see the effect that it has. So that's why I'm using this particular website. Okay, so this is the standard one, same as these two back here. Okay, so we're going to talk about making a down payment. The term down payment is when you make an extra payment right at the beginning of the loan. So let's say you're buying a house for $500,000, but let's say you've saved $50,000. Okay, so you don't save that and use it for the payments. You pay that so that like to the bank at the beginning, and then you don't end up paying any interest at all on that $50,000. So because you have saved $50,000, let's say to buy this home, then instead of needing to buy $500,000, subtracting $50,000 from that means you only need to borrow $450,000. Okay, because you've got this down payment saved up. So everything else is the same, 25 years, 2%. Okay, now, so notice you're borrowing a smaller amount of money, so the monthly payments are less. Instead of $21.19, it's $19.07. So it's a little over $200 less to pay every month. And look at the interest. Instead of owing almost $136,000 for the life of the mortgage, you owe $122,000. Okay, so about $13,500 less in interest paid because of making that down payment. So a down payment decreases the monthly or bi-weekly payment and reduces the total amount of interest you're going to pay over the life of the mortgage because you're borrowing less money. That's why you're paying less interest. The less you borrow, the less interest you pay at any given interest rate. Okay, so again, this is our standard one here. Now we're going to make some extra payments. And I want to show you the difference between making them sooner rather than later. Okay, so let's say we make a one-time extra $5,000 payment in October of 2025. So the interest to be saved is $3,206.60. So by making this early extra $5,000 payment, you're saving $3,200. Now, let's say instead of making the payment now, you instead make it later. Okay, so let's say I'm much later. Instead of 25, I'm talking about October of 2040. Same $5,000 payment. Now, so the amount of interest you're saving is $1,086. Okay, so you're still saving something, but notice you're saving more if you pay it off, if you make that payment earlier. The earlier you make extra payments, the more you pay. The more you save. And it also reduces how long you have to pay off the loan, the mortgage. So making this early payment, instead of 25 years, it takes you 24 years, 9 months. Now the later one still shortens it, but only by a couple of months to 3. Okay, so you're still saving something, but if you make that big payment earlier, you're going to save more. Now, this next one, again, this is the standard one. So we're going to make an extra monthly payment. So instead of paying $21.19.27, we're going to put let's just an extra $100 down. See what difference that makes. So you'd actually be paying $22.19.27. Right? So making just an extra $100 in payments over the entire life of the mortgage, you're actually going to, instead of taking, remember it's 25 years, it's taking 25 years to pay it. You're going to pay it off in 23 years and 7 months. So a year and 5 months earlier, and you're going to save over $8,300 in interest for just making an extra $100 a month. $100 might seem a lot to you, but if you're paying $2,100, okay, $100 isn't that much more. Okay, so so the total interest you're paying, this is how much extra payments you make: $28,200, just by putting $100 more a month on, and the amount you save is $8,300 over the life of the loan. So instead of paying it off October of, let's see now, 2050, you're paying it off by May of 2049. Okay, so making regular extra payments also reduces how much you're going to pay. So making a one-time extra payment or extra payments every month both mean you pay less interest and you pay the mortgage off sooner. And the earlier in a mortgage you make extra payments, the more you save. And that's the end of the tutorial.